This market is way more dangerous than most people suspect. If you've not been in crypto for several years, if this is your first cycle, then you're definitely underestimating how much risk there currently is. Because here's the thing, crypto prices are moved by liquidity, and liquidity sometimes goes into the stable coins, sometimes it goes into the risk on assets, and we can measure actually where we are in the liquidity cycle. Have a look at this chart over here. This shows the stable coin dominance. So how much of all of crypto is in stable coins measured in percent. And this peaked out at roughly 19%, and it's currently at 6.5%. Initially, in the first few years, we saw how the stable coins just got adopted. Then we've got our peak in November 2022, and since then a decline. Now, here's what's so fascinating about this chart. There is a direct negative correlation between the stablecoin dominance and crypto prices. When the stablecoin dominance is high, this means that a lot of people are simply parking their money on the sides. They've got their crypto money in stablecoins. They're not deploying that money into something risky that moves with the prices. So when we look at the middle of November 2022, when this peak happened, this is when Bitcoin bottomed out at 16K. Subsequently, the price of Bitcoin went up from 16K to roughly 100K, and that is when all of that stablecoin money got deployed. And so the question really is, what is the long-term equilibrium? Are we going to see simply just a sideways trading move now from a top that's somewhere at 19% to a bottom that's somewhere at 5%? Because now we've already seen all of that initial adoption. If that's the new normal, if we are going to move somewhere like this, and that means that the market could, in theory, get way more spooked from here, right? It could move much more into the stable coins, something that we've already seen in 2021 and 2022. And then, of course, if people move into stable coins, the Bitcoin price will go down. Here's another thing that a lot of people underestimate. How low could Bitcoin go in case suddenly things turn around? So let's play with the scenario that the crypto market is not expanding anymore. Let's say that it's already over. I'm not saying that this is the most likely scenario, but I am saying that it is possible, right? It has a non-zero chance. And historically, when we entered a bear market, we tended to fall below the average cost basis of the market, below the realized price. The current price is simply just what Bitcoin was traded for just recently. The realized price is when we look at all of the Bitcoin that have ever been moved. At what price did those Bitcoin actually move? Then we've got the reference price of the market, currently $43,135. Now, why does this reference price matter so much? It matters because everybody looks at the current prices relative to when we bought, right? When we bought Bitcoin for cheap and now we are 2x in profit, we might consider taking some of that profit. If we are now currently in losses, but long term we still believe in Bitcoin because it's a harder money, then we might not sell, right? So the lower we are, the closer we get to the realized price, the less selling pressure there is. And so ideally we want to buy when the market overall is in the negatives. Unfortunately, this still takes quite a while until we have those kinds of nice prices. Now, the realized price over time is increasing, and that's good. It's a testament of how Bitcoin over the long term, despite the cycles, tends to appreciate, but also tells a story that most people don't want to hear. In the case that things turn around, it can become ugly very, very quickly. Now, there's an even more bearish way to look at this. If we don't look at the realized price for the entire market, but just at the long-term holder realized price, then historically, again, during those bear markets, we tended to get very close to that price. Unfortunately, that price is even lower. It's only at 24,700. So the realized price of the entire market would suggest that Bitcoin is a steal at 43K. The long-term holder realized price tells us a story that 24K could be on the table. Now, this is also increasing over time, but still, it simply shows us the potential magnitude of volatility in case things turn around, in case things turn bearish. Now, those bearish scenarios don't even have to be crypto specific, right? It could simply just be some kind of a negative event that that then spills over to crypto. This has happened with COVID. It's likely going to also happen with future crises. If we suddenly get a banking implosion, if we suddenly get a commercial property implosion, if we suddenly see a massive downtrend in the Chinese economy, whatever it is, if we get a black swan event and people get risk off, then that will also translate into Bitcoin prices to lower. Now, having said all of that, why does the price of Bitcoin stabilize once we fall below those realized prices? Why are there people that pick up the pieces when the prices are that low and when most people say that Bitcoin is a scam and that you shouldn't buy it? The reason is, of course, long-term tokenomics, right? Long-term, there is less and less Bitcoin that's floating around, and there's more and more fiat that's floating around. When the fiat base is expanding and when at the same time the Bitcoin supply is contracting over time, the ratio of the two is in favor of higher Bitcoin prices. But again, there is a lot of volatility in that appreciation. Price declines can be 80% or 75%. But have a look at this. This is the Bitcoin inflation rate. And every year we get through the Bitcoin mining 0.8% of new Bitcoin that hit the market. But at the same time, the Bitcoin ETF absorbs 2.4% of the Bitcoin supply. So the supply expansion through mining is slower than supply absorption through the ETFs. And at the same time, we've got more and more long-term holders. So what you see here is the long-term Bitcoin price. And what we see at the bottom is the Bitcoin, the percent of Bitcoin that has not moved for the last 5 years. And this tends to increase very constantly over time. So more and more Bitcoin is in the hands of the long-term holders, of the diamond hands. Less and less Bitcoin is available for active speculation over time. Now we can also add the holders between 3 and 5 years. Then we do see a bit of volatility. In other words, when the price is absolutely going bonkers, when it's 4, 5, 6x compared to the prior all-time high, then even those holders tend to sell. But subsequently, during our rally from 3.5K to 60K, we haven't seen that cohort selling. And the same is true for the rally from 16K to 100K, right? This cohort tends to also accumulate now over time. And that makes the liquid supply, which is everything else, and scarcer over time. Now, how quickly does this go up? Let's take the data point over here, April of 2018 to our current data point. So we went from 30% to 46% over the span of 6.5 years. That's an annual supply absorption of also 2.4%. Very similar to what we already see through the Bitcoin ETFs. So that's 4.8% of the Bitcoin supply that gets stashed away, that gets locked up. And that's happening while already pretty much half of the Bitcoin supply isn't even that easily available anymore. So in other words, if say 50% is liquid and 5% of those 50% get bought up, the price will increase by more than just 5%, right? It will increase by at least 10%, probably more. And that again is every single year. So 10%. And then we have to add on top of that the fiat expansion. How quickly does the money supply expand over time? And those numbers are official. They're published by the Federal Reserve. This is the US money supply over time, a very long-term chart, starting in 1959. And instead of looking at this on a linear scale, we can look at this on a logarithmic scale. And isn't that fascinating how constant in percentage terms the money supply is increasing over time? Yes, there are decades where it goes a bit faster and other decades where it goes a bit slower, but overall this is a pretty stable trend. This is a growth rate of roughly 6.8% per annum. So this is how much the money gets devalued over time. This is what we protect ourselves from by buying gold or by buying stocks. Check this out. This is the S&P 500 divided by the US money supply. And sometimes stocks are very cheap, sometimes stocks are very expensive. We tend to be currently on the expensive side, but this does show us how we don't really make that much net money with stocks. Most of the gains we make with stocks is simply just the devaluation of currency. Now, Bitcoin has been launched over here, so Bitcoin's existence only saw rising stock prices over time. So relative to US money supply, stock prices increased by by almost 240% in the span of 16 years. But yeah, if we work with the assumption that any asset of long-term value goes up at least with the monetary expansion of 6.8%, and then on top of that, we've got the ETF demand and the long-term holders that stash away liquid supply. They've got 10% return from the ETF and the long-term holders, plus another 6.8% from the fiat expansion. So that's roughly 16.8% per annum at minimum. Bitcoin is almost like technology stocks on steroids. This is the Nasdaq 100 relative to US money supply. So that tends to go up over time. What we see over here is the dot-com bubble, right, where we accelerated and then subsequently imploded. But the long-term trend is pretty clear, right? Tech stocks outperform the monetary expansion, and so will Bitcoin. And so let's work with those 16.8% per annum of our expected return for Bitcoin. This means that after 5 years, we more than double our money. After 9 years, we 4x our money. And after 15 years, we more than 10x our money. And so this, I believe, how Bitcoin has to be seen today, right? It's not necessarily a vehicle to become rich tomorrow, but it is a pretty nice vehicle to diversify away from other asset classes and to spice up returns. I do believe it's a mistake not to hold any Bitcoin. I do believe it's a mistake to just hold stocks and gold and property. Right? At the same time, we do have an asset that's likely going to be around still in 5 to 10 years, and it's likely going to outperform the rest again because adoption is still quite fast. If everybody gets super interested in property, then the developers will simply build more. If everybody gets interested in Bitcoin, there will not be any more Bitcoin, right? Bitcoin's supply is not elastic. Inelastic supply with increasing demand means very quickly rising prices. And so yes, there is a lot of risk in the market, but that does not mean that if the Bitcoin price suddenly goes down by 50 or 60%, that we should call it a scam and that we should go away. It means the opposite. We should take advantage of that bottom because, again, long-term Bitcoin tends to outperform pretty much any other major asset class. And again, there is fundamental reason for that outperformance. It's long-term adoption. We don't just have the price increase due to monetary debasement. We also have the price increase because more and more people understand that Bitcoin is a good long-term store of value despite the volatility. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next YouTube video, or alternatively, see you in premium, because I do believe there are ways to time the Bitcoin market in a way to even outperform just buying and holding. So feel free to check that out. It's down below. So here's the website. Here is the 7-minute video. Feel free to check it out. I'm sharing my own trades. There's also plenty of tutorial videos, and there is a 1-week money back guarantee. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. So see you next time. Cheers.